Welcome to Barron's Roundtable, where we get behind the headlines to prepare you for the week ahead. I'm Jack Otter. Coming up, snack sales are slumping as Americans tighten their wallets and look to trim their waistlines. We'll break down what it means for the food industry and investors. But first, we begin with our expert panel and 3 things investors ought to be thinking about right now. On the Barron's Roundtable, my colleagues Ben Levisohn, Teresa Rivas, and Jacob Sonenshine. Ben, at 8:30 Friday morning, our view of the U.S. economy changed dramatically. Those jobs numbers came in, and suddenly we realized, wow, this labor market is weakening.
Yeah, I mean, it wasn't just the July number. It wasn't good. It was 79,000, supposed to come in at 100,000, but there were massive revisions downward, 258,000 jobs. So when you did the final math over the past 3 months, there were just 106,000 jobs created, only slightly more than were expected in July. And that's the worst 3-month sequence since COVID. And so the market, at that point, they basically said, uh-oh, maybe there's a recession coming, and sold off a bit.
President Trump disliked the numbers so much he shot the messenger. He is firing the commissioner of the Bureau of Labor Statistics. The night before, of course, the market was not crazy about Donald Trump's announcement, which is that he was increasing tariffs on a lot of countries.
Right. I mean, when the market started trading overnight with the futures, you saw that it was already down. It was already down close to 1% when I woke up at 5:40-ish and checked where the market was trading. And that's because of these tariffs. They're higher than expected. They're broader than expected. Yes, there are a lot of things that are exempted, but this just, I think, showed the market that maybe there is the taco tray that it's been betting on, that Trump will chicken out kind of thing, isn't true, that he's not going to, that he's very serious about this. But you're also seeing weird things, like he put a 50% tariff on copper, and yet copper prices fell 20% because they exempted refined copper products. And we saw GM gain when tariffs on South Korea were set at 15%, so they came down when the deal was made. And that's because GM has some factories over there. So there's just this weird stuff that goes on with the tariffs as well.
And Switzerland, 39%. I don't know what's
wild.
going on with that. So many headlines this week. On Wednesday, of course, the Federal Reserve met and held rates steady after Friday's job numbers. I think that greatly increases the odds of a cut in September. There will also be a new appointment to the Fed because of a vacancy that happened on Friday also. But we don't know when that new appointment will come.
Yeah, I mean, I think the thing with the Fed is that if they had these numbers, they might have made a different decision. I mean, the job market is looking this week. They do have a dual mandate, full employment, keep price stability. The problem, though, is that, while the job market might be weaker than expected, it's still unclear what's exactly going to happen with inflation because of tariffs, and that puts them in a very hard spot. We have, a bit of time until that September meeting. We might get more clarity before then, but it's a tough position for the Fed to be in. But I would bet that there is, and it's not just me, the market is betting, we'll get a cut in September.
And real quick, next week we'll get another look at the jobs market. In fact, investors will be looking at it more closely than usual.
Right, we're going to be looking at the jobless claims. It's usually thought of as more reliable than the other employment numbers, just because it is coming every week, and so it's more fresh. And they'll be watching that jobless claims number to see if the market's holding up, the labor market's holding up.
Meanwhile, Teresa, bad news on tariffs on the jobs market overshadowed really good tech earnings this past week. In fact, Microsoft briefly joined the $4 trillion club.
That's true. And of course, Meta also up 11% on earnings, which is a huge number for a company of that size. What we're seeing is companies that bet big on AI and are actually seeing profits from that are being rewarded by the market. But in general, this earnings season has seen big swings. It's not just big tech. We saw Generac, which makes generators, and eBay up almost 20% on earnings, while Align Technologies, which makes the Invisalign braces, down 36%.
Yeah, I mean, there are a lot of stocks that are actually obviously on both sides of that. But if you have one blemish on your earnings report, your stock gets punished because so many stocks came into earnings red hot. Carrier came into earnings kind of hot. It went down 11% after beating on both sales and earnings. The issue was the little blemish. Full year 2025 guidance was not moved up. So if you beat on earnings and then you don't move your guidance up, you're actually kind of implying the next quarter doesn't look so great.
Tough market. Teresa, what are you watching next week? More earnings coming up?
Certainly. There's a slew of earnings, and there have been a lot of companies that have had huge moves into earnings. I'm thinking of Supermicro Computer and Advanced Micro Devices, both up more than 80% in the last 3 months. So they have high expectations to meet.
All righty. Jacob, M&A. We haven't had much in the way of mergers and acquisition in the first half. It was kind of a slow first half, but you're seeing signs of life in that market.
Yeah, I mean, the first couple months we were down year over year a little bit. April was bad because of, the onset of tariffs. And then all of a sudden, all the cash that your global companies do have to put to work, they put trillions of dollars to work. We are now on pace for close to $4 trillion worth of M&A. That would be up a little bit year over year. I think companies have decided, hey, we're getting a little bit looser regulation. Think about the FTC, and the tariff picture isn't as bad as it was in April.
We're just about out of time. Wolf Research ran a screen of potential takeover targets. Investors love those. Give us some names.
I mean, tech and healthcare, I think, are ripe for M&A. C3 AI, it's not more than a $4 billion market cap. Some big tech companies could buy it. It's down like 80% since its IPO, and it's an AI asset that somebody could use.
All righty. Thanks, guys.